Good morning, everyone.
Good morning, sir.
So let's start our Sunday. Have you gone through all the questions just below the standards? You want me to discuss any question or you have not gone through till now? Yes. Fine, then we'll start with essay 260 now, and we'll start with essay 260 and we'll stop after completing essay 200 series. Okay? So essay 260. Yesterday we learned till what? Till essay 250, 200, 210, 220, 230, 240 and 250. So 250 was with respect to non-compliance with laws and regulation audit consideration. In non-compliance with laws and regulation, 240 was auditor's responsibility with respect to fraud in an audit of financial statement. 230 was audit documentation. 220 was quality control for an audit of financial statement. Quality control for an audit of financial statement. And similarly, 210 was agreeing the terms of audit engagement. So let's come to now 260. Scope wise, if you see, the scope of the standard is, what does the name suggest? What does the name of the standard says is what? Communication with whom? TCWG. Communication with TCWG. So TCWG versus management, first of all, what do you think is the difference? TCWG versus management? Yeah.
Day activities and TCW are the higher position levels like CEO or etc.
So TCWGs are more or less you are okay, but TCWG relates to the governing body, the governance body in an organization is anyone but, like, example BOD, example audit committee, who is governing you can understand by the word government. What does government do? Like right, they govern the country. Similarly, governing body will govern the entity, but management will be involved in the operating activities, managing the operating activities, managing the operating activities of the entity. So what does the standard deals with? Communication with TCWG or communication with TCWG or management? And management, communication with only TCWG. So remember that SA 260 deals with what? Communication with TCWG. So scope also tells you what? That this SA standard on audit 260 does not establish requirement regarding auditors communication with an entity's management or owners. You don't have to communicate with the managers or management or the owners of the entity, right? This standard does not require you to do so unless they are also charged with governance role. That means what is, like, in proprietorship entity or in entity of small size, what do you think will happen? The entity, the management and the governance person will be the same, right? So where the management and governing body is same, then you can definitely, while communicating to the governing body, you will be also communicating with to the management. And in that case, that is not like the violation of this scope, but however this scope tells you to communicate only with TCWG and not with management or owners of the entity, does not require you to do so. Similarly, additional matters to be communicated, like, for example, in the next standard SA 265 we will see, like communicating deficiency. Communicate, not just normal communication with respect to deficiencies in internal control has to be communicated to management and to TCWG both, to the management as well as to TCWG. So it, the standard says SA 260 scope that other wherever other communication is required in respect of any other standard, then here it won't be coming. So SA 265 deals with communication of deficiencies with internal controls to management and TCWG. So with respect to deficiencies communication, SA 265 will deal. You won't have to come to SA 260. You don't have to come to SA 260. So you can read additional matters to be communicated which complement the requirement of this standard in identified in another standard. In addition, SA 265 establishes specific requirements regarding the communication of deficiency, significant deficiency the auditor has identified during the audit to TCWG. Clear? Now the role of communication is very important. For you to understand, the effective two-way communication is important in assisting you to achieve anything. For example, if I am communicating with you and you are not communicating with me back, right? So that won't be an effective two-way communication, or that won't be an effective communication at all. So that is what they are also saying, that effective two-way communication is important. The auditor in understanding the matters and developing a constructive working relationship for both the points, that for you to understand the entity, its environment, their work, their working culture, everything, and for developing a constructive working relationship amongst the auditor and the management, effective two-way communication is important. And that is what they say, that you, in order for you to obtain information from TCWG relevant to the audit, there you need to have an effective two-way communication. Similarly, in fulfilling your responsibilities to oversee the financial reporting process, again communication is required to be made with the management, because they are only going to tell you about entire reporting process, how they are framing the financial reporting framework, what are they adopting the FRF financial reporting process, how is it going, and similarly any sort of information that you need to obtain from TCWG. So effective two-way communication is required in that sense. Here it says that although auditor is responsible for communicating matters required by this standard, management also has a responsibility to communicate. So don't you think auditor will be communicating according to his opinion, whatever points he needs to communicate to TCWG? So does it deprive management of communicating the same points? If the management also wants to communicate the same points what the auditor has communicated to TCWG, so does it deprive the management from communicating, that management is no more responsible for communicating the same points to TCWG, since the auditor has already communicated? What do you think?
So management has to communicate also.
Management has to communicate, right? Management will be fulfilling their responsibilities. It will not be depriving him of fulfilling his responsibility if the auditor has already communicated the same matters. Similarly, communication by the auditor also does not relieve management of their responsibility, and vice versa. If the same points which auditor wants to communicate, if the management has already communicated to TCWG, still it won't be depriving auditor to fulfill his responsibility to communicate the same to the management. That means what, auditor will have to communicate to the management, although the form, content, extent of the communication might be differing then. The form of communication, the form may be then oral or written, I don't know, but the extent of communication, that won't be then in-depth communication. If management has already communicated, then we can just summary wise, or not in-depth communication can be made. Similarly, content of the communication might be a bit different. So if the management has already communicated, it doesn't mean that you won't have to communicate to the TCWG. However, form and content and extent of the communication might vary. So what, that is what they say. Similarly, communication by management with TCWG, that the auditor is was required to communicate, does not relieve the auditor of the responsibility to also communicate them again. However, communication of this matter by management may, however, affect the form, timing of the auditor's communication. Form and timing might then affect it, because management has already communicated. Then we can then maybe we can communicate later on part of the month, end of the month, since management has already communicated to TCLG. So timing of the communication might vary, form and content, and the extent of the communication also might vary. Clear communication, specific matters के clear communication are required to be communicated by the standards in an integral part of an audit. That is what they want to say. Not much important, if you would ask me, but still you should try to recollect at least few of the points in the role of communication. If they at all like ask you effective two-way communication is important, please suggest in accordance with essay 260 effective two-way communication. Then you will say that yes, effective two-way communication is required to assist the auditor to communicate the matters that he want information from the TCWG, right? And similarly, second point was with respect to responsibility to oversee the financial reporting process of the entity. And then they will talk about that although auditor has communicated the same to the TCWG, it does not deprive management from communicating the same. Management also has to fulfill their responsibility. Vice versa, if management has already communicated to TCWG, then auditor will also have to communicate, although the form and timing of the communication might vary. The form and timing of the communication might vary. Clear? So go through these last 2 points. SS do not, however, require the auditor to perform procedures specifically to identify any other matters to communicate. That means what, you don't have to like find out the matters to communicate to TCWG. The matters will come automatically as and when you perform the audit. Whatever communication points you gather, that you have to communicate to TCWG. It's not like this standard tells you to communicate this, to communicate that, and therefore you have to find this about the communication. You have to find that point, find other matters that needs to be communicated to TCWG. No, no, no. SA260 just give the mechanism that you will need to communicate, what points you will be having to communicate, and similarly, whatever you are coming across during the audit has to be communicated in accordance with SA260. Law and regulation may restrict the auditor's communication of certain matters with TCWG. For example, that is what they are saying. If law or regulation prohibits certain matters to be communicated to TCWG, or any other sort of action which might prejudice an investigation by an appropriate authority into an actual or suspected illegal act, then who will prevail, law, regulation, or standards? Definitely law or regulation, right? So law or regulation always prevail over and above standards on auditing. So law or regulation, if restricts the auditor's communication to certain matters with TCWG, then you will not be communicating. Clear? Now, how do you determine TCWG? I already give you a glimpse of it. TCWG, it could be an appropriate person within the entity's governance structure. Subgroup of TCWG example they have given is audit committee. So TCWG, you can say TCWG could be BOD, just like for to remember with you an example. And subgroup of TCG could also be there. Subgroup of TCG. It's for suppose audit committee, right? Audit committee comes derive out of from the board only, right? So subgroup of TCWG can be audit committee which needs to communicate with the governing body. In some cases, all of TCWG may be also the same as management. Like I told you, in small entities, management and TCWG could be the same person. In however, in other cases, in these cases, sorry, in the cases where management and TCWG are the same person, if matters required by the standards are communicated with persons with management, that means what, you have communicated to TCWG. If you are communicating to management, that means what, you are communicated to TCWG also, because I told what, just in this point, in some cases management and TCWG could be same person only. That is, I am only the managing the entity, as well as I am also governing the body, governing the entity. That means what, if you are communicating with the management, that is deemed communication with the TCWG, and the standards requirement will be deemed to be have been fulfilled. Again, you will not to have to communicate with the same person. Now you don't have, you won't be communicating the same to the management, and then in you will say that you are acting in another capacity as TCWG also, so you'll communicate the same again. No, that won't be required. It will be deemed communication to TCWG also. Are we clear till now? Yes, anything? So now then, let's come to matters to be communicated. What all points you need to communicate to TCWG? What all points you need to communicate to TCWG? So I generally remember this through IFRS. IFRS. So I for independence. Let's quickly go to independence wala point. Auditor's independence. This is important. Come to auditor's independence, that you have to communicate with the entity, right? Auditor will have to communicate to the entity that we are independent from you. So particularly in the case of listed entities, auditor will have to communicate, must communicate to TCWG a statement that the engagement team and others in the firm are independent wherever applicable. Even the network firms are also independent, and they have that complied with all the ethical requirements with respect to what, independence. All the ethical requirements with respect to independence, their firm, their engagement team, even the network firms are independent. And you will also tell that all relationship and other matters between the firm, network firm, entity, right, are that in the auditor's professional judgment may reasonably thought to be your on the independence, you will have to communicate the same. That means what, you think that this can impact the independence, this could breach the independence in future, then also you should communicate the same. So first point, it tells you what, in the case of listed entity particularly, the auditor will have to communicate to TCWG a statement that the engagement team along with the firm and along with the network firm if required are independent from the entity, and they follow the ethical requirements. And other than that, you'll also have to specify that all relationships within the firm and entity, network firms, everything the relationship, whenever the auditor's judgment, professional judgment arrives, so he may reasonably thought that think that this might breach the independence requirement later on, then yes, they should definitely report the same. And then they definitely communicate the same, not report but communicate with the entity. Similarly, this shall also include the total fees charged during the period covered by the FS of the audit and non-audit services provided by the firm. So if you remember that statutory audit fees and non-statutory non-audit fees. So non-audit fees can it be greater than statutory audit fees in the case of certain entities? So I'll ask those certain entities later, but let first tell me, can non-audited fees or non-audit fees for those entities which are mentioned can be greater than statutory audit fees? Yes or no?
No, sir.
No, right? Do you remember professional ethics? Right? What all entities were covered there? Yeah. Which entities were covered for which non-audit fees cannot be more than statutory audit fees?
Public sector unit, a government company, listed company, other private company having turnover, paid up capital more than 50 crores.
Private company,
Turnover 50 crores. More than.
private or public company? Yeah, Suneshwaran. Private company or public company?
A public company, sorry.
Public company, right? So PSU, government company, listed company, paid up public company having turnover of 50 more than 50 crores, right? So there the non-audit fees cannot be more than statutory audit fees, and therefore that you also you'll have to mention here in the case of listed entity standard also requires you to communicate because in those entities listed entities were covered, right? So here also you'll have to communicate that total fees charged during the period covered by the financial statement for audit and also the non-audit service provided by the firm and network firms to the entity and components controlled by the entity. That means their subsidiaries also you will have to communicate with what non-audit services you provided to the subsidiaries and the fees charged to them. So auditor will have to include the total fees charged. And similarly, the related safeguards that have been applied to eliminate the identified threats, right? You remember we can eliminate the threats by applying the safeguards, or we can reduce it to an acceptable low level. So whatever safeguards you have applied, you will also have to communicate the same. You'll also have to communicate the same as an independence. You have to communicate with the TCWG a statement that engagement teams, when applicable, network firms have complied with the relevant standard. So what do you think? Do you think there is something important here? Important was listed entity. They are specifically talking about listed entity. So try to compile wherever the listed entity provision is arriving in standards on auditing specifically. So because why I'm saying this, because in exam they will say that A Limited is a listed entity. They did this. Then they'll ask you whether EQCRR can review the independence, whether the entity was independent, audit firm was independent from the entity or not. So do you remember there was one more point with respect to listed entity yesterday only we saw in SA 220. So you can make one list. SA 220 also it came in the point of EQCRR. Similarly, SA 260 also it came with respect to auditors independence. Getting it or not? So are we done with independence, auditors independence? What all points you have to communicate with respect to independence? First of all, particularly in the case of listed entity, you have to give a statement that yes, you are independent, even your firm, engagement team, and including your network firm. So these are independent. You have to communicate that. Similarly, all relationships that you have with your firm, network firm, associate of the entity with the entity, with the subsidiaries of the entity. So in the auditor's professional judgment, whenever you think that this relationship could impact the independence, that means could breach the independence, then you should definitely communicate the same. Similarly, you have to communicate the total fees that you have charged to the audit client, to the or for the auditing services and for the purpose of non-auditing services. So total fees charged for to auditing services and non-auditing services, that also you have to mention. And lastly, the related safeguards that you have applied to eliminate the independence breach. So independence breach or whatever identified threats that you identified, whenever whatever you apply to eliminate so those threats or to reduce those threats to an acceptable low level. So you have to also communicate the same. Clear? 3 points. Try to just go through right now. It's not much of a burden, so that it's not much of a burden later on. All relationships that may bear on the independence, that may have a bearing on the independence, bearing on independence. If you want, you can just like do like this, just beside the point you can try to summarize it in short. Similarly, this shall include total fees charged. So total fees was the second point. Fees charged, fees charged, and then the safeguards. So we'll try to recall all the points then. Bearing on independence, fees charged, and safeguards. BFS. Now let's come to I, then let's come to now F. F here will be significant findings from the audit. Significant findings from the audit. F. So just now we completed I, let's come to F, significant findings. So then here now auditor will have to communicate all the findings, right? During the course of his audit, he'll be finding a lot many things. He'll be accumulating a lot many queries. So whatever findings, whatever things he has found will have to be communicated to TCWG also. So auditor shall communicate with TCWG any view of the auditor about significant qualitative aspects of the entity's accounting practice. So any sort of quality issue that you find in accounting principle policies, accounting policies that the entity have adopted, accounting practice that the entity carries out, and the accounting policies, accounting estimates, financial statement disclosure, all these points, if you want that these are significant to the entity, for that it should form part of your communication. So if you think that this is a significant findings, then you should communicate the same to the TCWG. When applicable, auditor shall explain to TCWG why the auditor considered this as a significant accounting practice, why he considered this as a significant accounting estimate, why he considered as a significant accounting policy, right? They'll have to communicate the same as well, along with the communication of these significant accounting policy, accounting estimate, disclosure requirements. Second point, any significant difficulty that you incurred during the audit. Any sort of difficulty that you are incurring during the audit, that the management is not bringing with you all the audit evidences, management is putting limitation on your scope of work, right? And no reasonable justification from the management with respect to some points, or that the management is unwilling to assess it as a going concern. This going concern has to be assessed every year by the management. If not, then we can communicate the same to TCWG. So management assessment has to be there for going concern, going concern. So all these points could be there in the significant difficulties which encountered during the audit. Quickly, I'll tell you one very, very important point. Significant findings have also come in the exam. Significant difficulties have also come in the exam. And I particularly know that more than half of you will commit a mistake, that significant difficulties you will tend to recall the answer of significant findings, and when they ask you significant findings, might write significant difficulties answer. Clear? So you have to particularly pay attention what are significant difficulties and what are significant findings. So significant findings also we will learn, don't worry. Significant difficulties also, let's learn. So significant difficulties which have encountered during the audit may include such matters: that is unreasonably brief time with which to complete the audit. That means you're not given sufficient time to complete the audit. You're not been available with what sufficient time, and that is a difficulty in a way that you will not be able to deploy all the standards on auditing practice that you follow. So in that case, that is an significant difficulty which you are encountered during the audit. That means unreasonable brief time within which to complete the audit. Significantly, there are also delays by the management. Already there is so much less time, and now management is also delaying to give us the information, to give us the access. So management unreasonable delay by the management, unavailability of the entity personnel, or unwillingness by the management to provide information necessary for the auditor to perform this procedure. Then third one is extensive unexpected effort required to obtain SI. You're not able to obtain sufficient appropriate audit evidence effortlessly. For that to obtain, you will have to take a lot of efforts. If that is the case, then yes, that is a significant difficulty. For you to obtain audit evidence, it should be effortless. Management should give it to you at once. Then unavailability of expected information. If the management is unwilling to communicate certain information with you, then definitely you can call it a significant difficulty that you have encountered during the audit. Significant encountered difficulties are encountered, right? Are you finding significant difficulties are encountered, not the findings? So findings, just like normal course of audit, you'll have to communicate the same to DCWG. Similarly, you will have to communicate significant difficulties that you have encountered, and significant difficulties that you encounter during the audit will form part of significant findings. Significant difficulties, this. Significant difficulties that you encounter during the audit, significant difficulties that you encounter during the audit will form part of significant findings during the course of your audit. So again, let's just quickly see unreasonably brief time. And ऊपर से management और ज़्यादा delay कर रहा है, management is delaying much more than already there is a lot of time crunch, right? And then thirdly, extensive unexpected efforts required to obtain sufficient appropriate audit evidence. That means management is not giving with you all the audit evidences, sufficient appropriate audit evidence at once. And then there is also unavailability of certain information. There could be a restriction which is imposed by the auditor to the auditor by the management. That means management is restricting or applying the limitation in the scope of work. Management is not allowing the auditor to do certain work which is under his scope. And then lastly, management is not willing to make the going concern assumption, going concern assessment. As per SA 570, management has the responsibility to assess going concern assessment. We'll see later as per SA 570. But here management is unwilling to assess its going concern. Could be any reason, but it's unwillingness. These are what significant difficulties encountered during the audit. So if you can just go with the flow, like unreasonably brief time was there. And in fact, above that, on the top of that, we were also like there were also certain delays by the management. So management also delayed. So extensive unexpected effort is required to obtain SAI. Therefore, because of this, we required a lot many efforts to obtain SAI, and information was also not available in those SAIs. So therefore, there was a restriction which was imposed by the management. I got to know that there was a restriction imposed by the management, and therefore now I told management that if you are unwilling to assess yourself as a going concern, then we might be liable for you to qualify our opinion, or similarly whatever be the action that could be taken by the auditor. So 6 points are there in the management's difficulty. Quickly go through these 6 points once again, please. These are important significant difficulties encountered during the audit. Difficulty. Please go through this once again. 6 point of significant difficulties: management willingness to make or extend its assessment of the entity's ability to going concern, right? This one, na?
Yes, sir.
So as per SA 570, it is the responsibility of the management to assess themselves that are they going concern or not. They have to foresee that will they be in the future going concern entity, or will they be winding up the entity in near future. So they have to assess themselves based on their operation, based on their assumptions, based on their business model. Is there any regulatory requirement that has come up recently which has banned their products, which might could impact the going concern? Or are they incurring losses a lot? Have they become sick units? So whatever could be the assessment, they have to assess and quickly tell, I mean not quickly, but tell that whether they are going concern or not. So every year they have to make this assessment, but the management has to make the assessment, and based on the assessment that management has made, we will then perform our procedure in accordance with the SA 572, decide whether the entity is going concern or not. We'll then again do our procedure in accordance with SA 570, that we'll see in that standard. So if management is unwilling to do the assessment, then how can we proceed further? There is a significant difficulty, right? Difficulties which is encountered during the audit by the auditor, that management is not willing to assess themselves as a going concern, which is their responsibility. In essence, you could say that management is not fulfilling its responsibility. So that is a difficulty, right? Yes, Dhanlakshmi.
Yes, sir.
So you can just link through this only all the 6 points. You should remember. You don't have to forget this all 6 points. See, you can just link this. Unreasonably brief time was there, and on the top of that, there was also significant delays done by the management, right? And then, because of this, you were required to employ unexpected efforts for obtaining of sufficient appropriate audit evidence. And you deployed your all efforts. You took all the efforts, but still expected information that you expected was not made available by the management. So this, if the information is not made available to you by the management, that means what? This is a restriction limitation imposed by you on the management. And what was the restriction? If there if at all there was certain other restriction, then this was again one more restriction was management is not willing to make the assessment of the entity's ability to continue as a going concern whenever requested. So just in the flow, try to recall all the points. Unreasonably brief time, on the top of that, delay by the management. So we have to take so much of effort to obtain SI, but still we were not available. But that means still available information was not made available to us, and this was a restriction which was imposed by the auditor, which was imposed by the management on the auditor. And one more restriction was management unwillingness to make the extend the assessment of the entity's ability to continue as a going concern. Now, this was only the second point. If they ask you significant findings from the audit, the question is if at all they ask you significant findings. So you will just specify first point, and in the second point you will only specify difficulties encountered during the audit. Not you might not go in detail what are all the significant deficiencies findings. Sorry, significant difficulties. You'll just simply tell what significant difficulties encountered during the audit, and let's go to point number 3 then. Significant matters discussed or subject to correspondence with the management. So whatever point you think that this needs to be discussed with the management, then you can also think that these are all the significant findings which you also need to communicate to the TCWG. Because here in this standard we are communicating with whom? We are communicating with TCWG. And therefore if you find that these are subject to be correspondent with the management, that means you are already communicating, you are subject to communicate with the management, then you should also treat that as significant matters. And therefore if it is a significant matter or significant finding, then yes, you will have to communicate it to the TCWG. And then the next point says that unless all of TCWG are involved in managing the entity, that means what? Again, in the case of small entities, management or TCWG could be same person, but here it says no, we are not considering those points. Whenever the TCWG and management are two different entities, two different bodies, two different persons, then in that case significant matters during the audit that were discussed or subject to be correspondent with management, you will communicate that. Already point C, same point number C is same. Point number C and point number 1 of point number D. Point number C and point number 1 of point number D are same. That means whatever you are already discussing with the management or corresponding with the management, you should communicate with the TCWG if TCWG and management are different person. And written representation the auditor is requesting. So suppose any management representation that you want from the management, you are requesting from the management, then of course you can also communicate to TCWG. That is what this point D wants you to say. Wherever TCWG and management are two different persons, then significant matters that you arise during the audit that were discussed or subject to be correspondent with the management, plus written representation that you seek from the management, that you want from the management, any written representation, then you should also communicate the same.
So if asked about the findings only, then we have to write point A to F except the 6 points of B, na?
Yeah.
Okay, sir.
Now, last 2 point is with respect to whatever findings that you find in respect of form and content of the auditor's report. So, suppose you found something or any circumstances arise because of which your form and content of audit report changes, not substantially, but any sort of changes occur in your form and content of the audit report, then you should also deem this as significant finding and communicate the same to the TCWG. And any other sort of significant matters that you in your professional judgment foresee that yes, this should be communicated to the TCWG, then yes, you can communicate the same by considering it as significant finding. Whatever matter that you come across during the course of your audit in your professional judgment, in the auditor's professional judgment, you find that yes, it is relevant for us to communicate the same, then yes, you can consider that a significant finding and communicate the same to the TCWG. Are we clear? So in RTP May 2022, they have asked significant difficulties, and in one of the questions they have asked significant findings. So just try to bifurcate both the questions. So how do we then, let's try to recollect all the points of significant findings. So this is the trick to remember the points for significant findings. Significant findings. So there is an auditor's professional judgment exam, auditor's का professional judgment exam है, and in there you found that there are so many significant difficult question and answer being asked, so many significant difficult question and answer, significant difficult question and answer that were asked. So you found that unless all of TCWG and management, if they don't come into form in you can you see, like, we expect Virat Kohli to come into form today in order to save India by the defeat World Test Championship, right? So today is the day where and where India either could win or could lose. So we expect Virat Kohli to come into form. Similarly, we expect that unless all of TCWG or management to come into form, if they don't come into form, then auditor's report might go in vain. Auditor's report might be futile then. So that is what they are saying, that auditor's professional judgment exam. So here, this is the last point. You can mark these points. This is last point. You'll tend to recall the last point first, auditor's professional judgment. Then significant difficulties encountered during the audit. This is point number B. Significant difficulties encountered during the audit. And then Q&A. Q&A is point number A. Q&A is what? Qualitative assessment, qualitative aspects. Qualitative aspects of the accounting policies, accounting principle, accounting estimate, accounting. Qualitative aspects of the entities, accounting practice, accounting policies, accounting estimate, disclosure requirement, whatever. So Q&A is qualitative aspects. Unless all of TCWG and management form में नहीं आते, that means what? Unless all of TCWG and management are same, then you will have to communicate the same points which you have discussed with the management. You should also communicate it as significant findings to the TCWG. And also whatever management representation that you seeked from the management, that you requested to the management, that point also you should communicate. And lastly, auditor report will go into vain. Auditor's report. So remember, any point, any circumstances that arise because of which your report, form and content of your report might be changed. So that was the last point. I hope you are able to recall all the points. You can go through this once again, mark this, whatever points you want to mark, but do try to recall both the questions, both the answers, because I don't want you to get confused in the exam, specifically when we have given so much time now.
सर वो वाला पॉइंट एक बार बताइए ना, that unless the TCWG and are involved in managing the entity, that point in brief. And so TCWG also is managing the entity.
That means what? If the TCWG and management is same person, then you don't need to consider that point, because they are actually trying to differentiate the point where you have communicated to the management. So you should also communicate the same points to TCWG also. Like we understood from the scope also, right? Whatever point you find that yes, this is important, so you should communicate to TCWG. And even if you have communicated the same to the management, still it is your responsibility that you should communicate to TCWG. Even if the management has communicated to the TCWG, still it is your responsibility to communicate to TCWG, right? So that is why here also it says that whatever points you have communicated to the management, you should communicate to TCWG if it at all it is a significant matters that you have discussed with the management. So if this will happen only when management and TCWG are two different bodies. If management and TCWG are same bodies, then if your point communicated to the management, then you need not communicate to TCWG. If management and TCWG are same person. So that is why they have said that unless all of TCWG are involved with the management, Unless that means negative, unless all of TCWG are involved with management. If that is the case, then you did not consider the below 2 points. But if that is not the case, that means management and TCWG are two different bodies, then you will communicate whatever request that you representation that you requested from the management, that also you will have to communicate. And further, whatever discussion points that you had with the management, you should communicate that also to the TCWG.
Okay, sir.
ठीक है? Anything else? Anything else? So we'll then go to last 2 point, IF, then RS. What all points were we communicating with the TCWG? First of all, we communicated regarding independence I. F for significant findings, whatever findings you encountered, that also you have to communicate. And then from R, we find what responsibility in relation to financial statement audit. So auditor should communicate his responsibility. What is his responsibility? To express an opinion on the financial statement, whether it is true and fair, whether the financial statement as a whole are free from material misstatement, whether due to fraud or error. So auditor is responsible for forming and expressing of an opinion. So auditor should communicate the same to the TCWG. And the audit of FS does not relieve management of their responsibility. So if I have done the audit, it is not like everyone will jump on me. Everyone will start holding me as responsible. No, management and TCWG, whatever your responsibility was, it will still be intact with respect to financial statement reporting, whatever be it. I am also always responsible for audit, and that too in the audit I am responsible for expressing an opinion on the financial statement, that the financial statement as a whole are free from material misstatement, whether due to fraud and error, and this assurance is reasonable assurance. So that is what you have to communicate to the entity. And secondly, planned scope and timing, IFRS. So scope of the audit, timing of the audit, planning of the audit. Scope of the audit, you will have to communicate that what all points are you going to cover. Timing of the audit, you will have to communicate that by what time you will be able to complete the audit. So how auditor plans to address the significant ROMM, how auditor plans to address areas of higher assessed ROMM, how auditor's approach is towards internal control, and the application of the materiality. Please go through 4 points again, and then we are almost through with this standard. Just last 2 points are remaining.
Is related to the auditor independence and significant finding, and the last point you discuss. Because you have memory technique, IFRS. So matter to be communicated is independence. Independence is also need to be communicated. I mean, significant finding also need to be communicated. And last two is this tool.
Responsibility of the auditor and scope of the audit, timing of the audit, scope of the audit.
The last 2 point you discussed, right? That one.
Last two
Last.
point means which point? This planning and scope, timing and of timing of the audit.
This one and another one. This is the S
First one
and
is responsibility.
okay,
Second one is
okay,
scope
yeah,
and
yeah,
timing
yeah.
of the audit.
Okay, okay, yeah, sir.
So both have to be communicated. See the numbering 1, 2, and then finding is with third number. Go through this once again. If you feel any sort of doubt, please ask me right now. Yes, shall we move ahead? So whenever you feel exhausted or any sort of thing like, no, now the mind is not grasping, just take a sip of water and tell yourself that you have to. Okay? The communication process, straight away come to this part, the communication process. Now establishing the communication process, auditor will have to establish a process or channel by which the communication will happen from the auditor to TCWG, right? So how the communication has to be done? How should the communication be done? So this says that regarding significant findings from the audit, if the in the auditor's professional judgment, oral communication would not be adequate. That means what they want you to communicate in writing. They want you to communicate in writing. If oral communication is not adequate, if oral is not adequate, then only you can communicate in writing, or you can communicate in writing anyway. But they specifically want you to communicate in writing whenever oral is not at all adequate. Then you have to communicate, but in writing. However, With respect to independence, there is no such oral communication. You have to communicate in writing because that will be documented. So independence has to be documented, right? EQCRR will come. Do you remember last class? EQCRR will come and also review the independence, whether the firm was independent or not. So everything has to be documented with respect to independence, and particularly in the case of listed entity, that is why we saw what auditor's independence has to be communicated, and this communication should be done in writing, only in writing, cannot be done orally. So again, if I want you to say, so form of communication, you can divide this into two parts. With respect to independence, always in writing. And then with respect to other findings, significant findings, it can be oral, it can be in writing if oral is not adequate. ठीक है?
सर थोड़ा टाइम दीजिए उसको देखने के लिए.
Yeah,
Sir, can you enlarge that portion? Just you have.
your voice is not audible enough.
सर वो enlarge कीजिए ना उसको, थोड़ा सा बड़ा कीजिए ना. हाँ.
So this talks about what your form of communication. Form of communication could be oral, could be written. Now timing of the communication, they can frame an MCQ. Till now they haven't asked from either form or from either timing. Not yet asked, but yeah, they can frame sort of MCQ. So see, timing of the communication regarding planning matters. So whatever planning matters you want to communicate to TCWG, that okay, I plan to finish the audit by this month, I plan to finish this, so you should provide me with all the relevant accesses, documentation, evidences, everything by this date. So whatever you plan regarding everything with respect to planning matters, you should try to communicate as early in the audit engagement as possible. Early in the audit engagement, early process. Then any difficulty that you encounter during the audit, you should try to communicate as soon as practicable, ASAP. Any difficulty that you encounter. Now in case 701 applies, then the auditor may communicate preliminary views about key audit matters when discussing the plan, scope and timing of the audit. So preliminary views about key audit matters when discussing the plan, scope and timing of the audit, and may have more frequent communication to further discuss such matter when communicating about significant audit finding. So what is 701? SA 701, anyone?
Key audit matters, sir. CAM.
Key audit matters, right? Key audit matters. So what they are saying, that if you want to communicate key audit matters or your preliminary views about the key audit matters, so you can discuss this when you are discussing the planned scope and timing of the audit. So do you remember this was one of our point to communicate with the TCWG? The last third point, or sorry, last second point, or from starting it is third, it was third point, IFRS. Sorry, last point, IFRS. IFRS का S. So when you are communicating that scope wala point na, scope of the audit, timing of the audit, you can try to communicate what is your preliminary view with respect to the key audit matter as per SA 701. 701 applies in the case of listed entity, again a standard, a provision which applies in the standard when it is only for listed entity. So for listed entity we saw what SA 220, SA 260, and now also SA 701 key audit matters applicable for listed entity. And in that case, if you want, then you will have to communicate your preliminary views regarding the key audit matters while you are communicating the scope and timing of the audit. And can also have more frequent communication to further continue the discussion with respect to that. But yeah, you should try to communicate with the planned scope and timing of the audit. And then communication with regarding to independence communication may be appropriate whenever significant judgments are made about the threat to independence. And then communication regarding findings from the audit may be made as part of the concluding discussion. So whenever you are concluding, that is, you will be communicating what? You will be communicating, say, draft audit report. So conclusion. Sorry. So at the conclusion stage, you can also communicate what your findings. Go through this, you will be able to get. Yeah. So tell me, Nupur, significant difficulties encountered during the audit.
Unreasonable brief time and delays by management, unexpected effort required to obtain sufficient audit evidence, unavailability of expected information, restrictions imposed on auditor by management, and management's unwillingness to uh, give going concern
Assessment of the going concern.
ability. Uh,
Nikita, tell me indicators of non-compliance with laws and regulation. Indicators.
When there is adverse news media, adverse media comments, and
Uh,
then
adverse media findings.
adverse media findings, unusual payments,
Huh?
unusual payments
Unusual payment in.
in cash, unusual payment in cash, unusual payment towards legal and retainership fees,
Hmm.
then tax havens, unusual transactions with tax haven, where
Hmm.
companies registered in tax haven, payment for goods and services made in other country from which the goods or other than the countries from which the goods and service originate.
Hmm.
In case the IT system of the company fails,
Hmm.
remember
Yes.
but sales commission, sales commission or agent fees paid looks very excessive in nature.
Excessive as compared to market. Similarly, for sales, it could also say be purchase.
Purchases.
Any investigation authority has come for you, income tax authority has raided the entity, or any investigation is happening, that also could reflect a non-compliance, right? Investigation by outside authorities, regulatory bodies, or any sort of investigation inspection happening. ठीक है. So let's start now. Yeah, this was one RTP question which I want you all to go through that. It's kind of a same question that we did first, to effective two-way communication, role of effective two-way communication. So more or less on the same lines, but institute has given its answer, so you can go through this once. This is an RTP question. Just try to remember the question as well as the answer. I hope this is clear to everyone. Reporting to shareholder, the difference. Standards applicable is different. There is a difference in standards which are applicable. Then reporting is done in shareholder. Reporting is done on true and fair view of the financials, whereas in reporting to TCWG is being done on IFRS points, right? IFRS. And then external or internal shareholders are external and TCWG are internal. So the reporting internal report or external report. Let's come to now asset 265. I told you what communicating deficiencies in internal control has to be communicated to management and TCWG. Now, why do you think we are also communicating to the management here? Yes. Why do you think we are also communicating the deficiencies in internal controls to the management also?
Responsible for placing internal control. Like if there is any deficiencies in internal control, we need to hear the point of view of the management also.
Management is responsible for implementation of internal controls, so they should be aware about this. But we can communicate the TCWG and then TCWG can communicate to them. Just like in previous standard, there could be also so many points which management might be implementing. We were communicating regarding all the findings regarding operation or any sort of findings we were communicating to TCWG. But here implementation of internal control is not a matter of just the implementation, it is also a matter of emergency matter could also be arise. Like example, there is a breach in internal control and that needs to be rectified as soon as possible. Now this process could take up time. You will communicate to TCWG. TCWG will later on take some action, tell the management to rectify the same. But till the time the fraud will happen, till the time manipulation, everything with falsification can happen. So for that matter, you should communicate to the management. And in fact, in this standard, it also says that you can communicate the management in certain cases earlier than TCWG. Specifically, they are talking about this case because deficiency in internal control could be a big issue. And therefore, for that matter, you can directly communicate to the management because management is ultimately we implementing and rectifying the any lacuna in the internal controls. So any breach in internal controls, any improvement that is required in the internal controls, any deficiency that you find has to be communicated to both management and TCWG. So first of all, what does deficiency in internal control means? Deficiency in internal control. That means what? Why are the controls implemented? First of all, why are internal controls implemented? Yes.
So for smooth running of a business, for day-to-day check on the business, the all policies is performing or not.
Yeah,
For
right on.
mitigating the risk, sir.
So for example, I'll tell you P2P process. Have you heard about this? Procure to pay process. P2P procure to pay process is an integral process of any entity that you take, any entity. So P2P process is what? Where you will have to do what? A purchase order will have to be created. But before that, first of all, a material requisition has to be created. That means what? The first person will see whether we require any material. Then he will prepare material requisition note. It will go for approval for the purchase manager. So approval is required of purchase manager. He will check whether this material is already existing in our stock, yes or no. If yes, then why will he approve? So a purchase manager will send the approval and then later on this will be sent to the PO department. So purchase order will be created where will be what do we say, like quotation will be ordered. So quotations will be required from the,
Purchase requisition.
yeah, purchase requisition will be requiring quotations from the external suppliers. So the suppliers will be sending us the quotations. Then again there is a control that we require minimum 3 quotations, then only we will deem that quotation as valid and we can act on that quotations. So minimum 3 quotations should be there. You should select the quotation with least price. If you are selecting any quotation with more than least price, then you should justify the reason, justify yourself why you are accepting the same, justify with reason. So like this there are so many controls. Then the purchase order will be created, then from the order then the invoicing will be done. So invoicing again, the amount that is reflecting, the quantity that is reflecting should tally with the purchase order, should tally with the purchase requisition note, material requisition note, and this amount quantity should tally. and then later on it will be done with accounts payable. So again, the control would be whoever is involved in accounts payable should not be involved in invoicing. Whoever is involved in the payment to these suppliers should not be involved here. That is what I told you, segregation of duty. This is all internal control. These are also internal controls to smoothen out the process and to ensure that the process, whatever be the process of P2P, should be implemented effectively. So internal controls deficiency will be what? That these controls are not able to be implemented. That means we have deployed the controls, but they are not operating effectively. That means, in fact, they have been implemented, but they are not operating effectively. That means there are certain breaches where purchase manager is not checking whether material is there or not and straight away approving. Similarly, there could be certain cases where we are accepting quotations and we are where we are expecting accepting quotation with more than least minimum price. There could be a case where invoicing or accounts payable is handled by same department. So all these controls, there could be lapses. That means what? Operating effectiveness is not there in the internal control. And deficiency here means will be what? A control is designed, implemented or operated wherever the deficiency, either in the designing or in the implementation or in the operation, the deficiency is in a such a way that it is unable to prevent or detect or correct the misstatements in the financial statement. That means what? There is control risk. Because of the control risk, there are deficiencies in internal control. So there is inherent risk. To cover up this inherent risk, we impose internal control so that the inherent risk is reduced or eliminated. But again, not everything is 100% correct, right? So because of inherent limitations in the internal control, there could be control risk, and because of which this limitations might lead to what? These controls may not be able to prevent, detect or correct, what we will call is as PDC. They are not able to PDC the misstatements in the financial statement. That is what is the deficiency. But here in this standard in asset 265, we have to deal with significant deficiency, not just normal deficiency. You can say the misstatement, no, but material misstatement. Similarly, deficiency, okay, fine, but significant deficiency we'll have to deal with. Significant deficiency. So a control necessary to PDC misstatement in the financial statement on a timely basis is missing. Then also you will call that as what? Deficiency in the internal control. If the control should have been there, but the control itself is missing, that means control itself is not there. Control is not designed, not implemented, let alone operating effectiveness. Operating effectiveness comes later on when the control is implemented. However, where control is not at all implemented, not at all designed, it is missing, then also it is called as what? Deficiencies in the internal control. But I told you what we are involved here with. We have to deal with significant deficiency. So significant deficiency is a deficiency or a combination of deficiencies. That means similar to kind of a misstatement or a combination of material misstatements. Here also deficiency or a combination of deficiency in internal control that in my professional judgment is of sufficient importance to merit the attention of TCWG. That in my opinion, he should be told to, this should be told to the TCWG, this should be communicated to TCWG. Then in that case, deficiency will be called as what? Significant deficiency. So I hope deficiency definition wise everyone is clear. What is deficiency? Deficiency when operating effectiveness is not there, because of which a misstatement could happen in the financial statement, or control itself is not there, control itself is missing. Similarly, significant deficiency is what? A deficiency or a combination of deficiency which lead us to communicate the deficiencies to the TCWG. Then in that case, that deficiency will be called as what? Significant deficiency. So this question came in my attempt. This question was examples of matters which the auditor may consider when determining a deficiency or a combination of deficiency is a significant deficiency or not. So deficiency is a significant deficiency or not. Similarly, combination of deficiency, whether they are significant deficiency or not. What examples of matters that the auditor will see here? Auditor, what matters will he consider here? So we have to give examples. Are you getting the question? Examples of matter that the auditor needs to consider in determining whether a deficiency or combination of deficiency constitutes a significant deficiency. So whether these deficiencies are significant deficiencies or not, how will the auditor address this matter? How will the auditor consider all these matters? So examples we have to give. The first one being likelihood of the deficiency. So if you feel that this deficiency could lead to misstatement in the financial statement, then you will treat that deficiency as significant deficiency. If the deficiency could lead to misstatement in the financial statement, then definitely that misstatement, that deficiency is a significant deficiency. Similarly, the susceptibility to loss. So there, if at all there is a deficiency because of which the financials are susceptible to loss or the entity is susceptible to loss, then that deficiency is also a significant deficiency. Similarly, subjectivity and complexity of the determining estimated amounts, such as fair value accounting estimate, etc., etc. Fair financial statement amount exposed to the deficiencies. So what to all amounts are exposed? If the amounts are material amounts, then again this deficiency will be considered as what? Significant deficiencies. The volume of activity that has occurred or could occur in the account balance or class of transaction exposed to the deficiency. So one is with respect to the monetary term, rupee wise. Financial statement amounts, rupee wise. And this is with respect to amount, not the rupee, but the quantity wise. So if at all the quantity of the you can say volume of activities or the quantity of activities activity wise, if there are a lot of activities which is exposed to that deficient internal control, if there are a lot of activities which are exposed to the deficient internal controls, or similarly if there are lot of amounts in the financial statement, rupee wise amounts in the financial statement which is exposed to that deficient internal control, then definitely that deficiency will be treated as what? Significant deficiency. So you can see here all points. Similarly, the cause and frequency. If the because the deficiency, what is the cause of that deficiency? Is the root cause. What is the root cause? Similarly, the frequency, how much frequent this deficiency occurs, and the interaction of the deficiency among other deficiencies. So that they could either be in combination with other deficiency, could be material deficiency. So that is how we have to see what is the interaction between deficiencies and other deficiencies, the interaction amongst them.
Sir, I have one question.
Yes.
Sir, in 265, actually what we are doing, the internal control is there. Due to the control risks, there is some could be some limitation, or if the control is not implemented, internal control is not implemented or prevented, that is the deficiency we are now here we are discussing. And if this is significant, then only we are reporting with this 265. My question is, sir, if internal control is not designed yet, means that there is no internal control, whether we will go with this standard or there is another standard.
No, this standard only. It says now specifically it says where the internal control is missing. Then
Okay,
also you
okay,
will treat this as a deficiency only, na?
okay, sir. Yeah, thank you, sir.
Then also it is a deficiency. Then you will have to evaluate whether the deficiency is a significant deficiency or not. Are we clear till now, everyone? Indicators. Now let's come to indicators. Or if you want, you can just go through these points once again. Try to group few of the points so that if at all it comes again as a question, then you are able to recall at least 5 or 6 points. Grouping wise, you can do out of 8 points. If at all someone comes out with something, can share with the class also. Yeah.
So, please explain the point number 8, the interaction of deficiency with other deficiency in internal control.
See, what we are
What
trying to
could be it?
see is whether the deficiency or a combination of deficiency could be significant. Like similarly, whether a misstatement is material or a combination of misstatement, right? Could be material. Example, if I tell you in today, if I we could be doing SA 320 materiality. So materiality amount, suppose it's 1 crore, and misstatements, if more than 1 crore, we'll call that misstatement as material. Or suppose you can also combine it with other misstatements, and if all of them are exceeding 1 crore, then we'll call those all misstatements as material misstatements. Material. Similarly here, deficiency in standalone deficiency, if you see, it could be that it is not a significant deficiency. However, when you combine it with other deficiency, like this is also deficient, there also the P2P process is not followed. P2P process में वहाँ पे approval is not there, approval of purchase PO is not signed by the purchase manager. So could be any sort of deficiency, and combining it with other deficiency, then it could be a significant deficiency. So for us to assess whether combination of deficiency is a significant deficiency, we have to see that what is the interaction of this deficiency with other deficiency. That means relationship between both these deficiency. You cannot straight away combine some deficiency with any other deficiency. There has to be certain relationship or certain interaction. And then when you combine it, then you will have to assess whether it is a significant or not. Are you getting it?
So,
So now let's come on to next question, indicators of significant deficiency. So again, indicators, very very important question. Whenever you see indicators anywhere in the standard, just mark them as important. So indicators here is also they've asked in Gen 21. So number in my attempt they asked this question, and just in the next attempt in Gen 21 they asked this. And I'll tell you what, this they have asked, but I have written this answer. So that is how you could be manipulated. There is a very thin line of difference. You'll have to see the language which I was telling you just above the question. What is the language? Examples of matters that the auditor may consider in determining whether a deficiency or a combination of deficiency in internal control constitutes a significant deficiency. Here what they are trying, what are the indicators of significant deficiency? More or less, if you could logically think, that is probably going in same lines. There you are to tell what are the indicators which can indicate you that yes, this is a significant deficiency. And here you have to understand what are the examples of matter that we should consider in order for us to assess whether a deficiency or a combination of deficiency could be a significant deficiency or not. So what all points we should assess, what all points we should consider, what all matters we should consider, examples of those matters. And here, how are this indicating you that this is a significant deficiency? Indicators of a significant deficiency. So again, I am telling you again, answer is important, but more than that, what is important is the line above the answer. Clear, everyone? So here now the indicators of significant deficiency, the answer is, it could be ineffective aspects of the control environment. So what do you mean by control environment? Control environment. Do you know the components of internal control environment? Components of internal control environment. Yeah. So I can say control environment is the brain of internal controls. I can say like that. Like for our body, what is the most important thing that is there in our body is like kind of a brain which gives an atmosphere to in the entire body, right? Which gives the nourishment or which enriches the entire body. Similarly, the internal controls, there are 5 components to internal control: risk assessment process, then there is monitoring of internal control, then there is information system, and one more was there. One more was there. Um, So this is what one more component is what control activities. So out of all the components of internal control, control environment is like the brain of the internal control components, that is like the atmosphere that it is trying to create in the entity control environment. So if at all, if that is ineffective, that means control environment itself is ineffective, then that shows that there could be deficiency in internal controls as a whole. Other internal controls could also be impacted, whether be it this control with this component, or be it this component, or any component could be impacted if control environment itself is ineffective. One indicator. Secondly, RAP, risk assessment process, which is another component of internal control, if it that is absent, or that is also ineffective. So if you're not assessing the risk itself, that means what, you should be able to assess the risk. You should proactively see whether the risk lies in doing this transaction, whether the risk lies in this formation. So risk assessment process should be there within the entity. If at all it is absent or ineffective, that is a major indicator of deficiency. Then ineffective response to identified significant risk. So even if you have the risk assessment process, you are assessing the risk, but then after assessment of the risk you found certain risk, but you are not taking any action. You should then respond also to any risk that you identify. You should also effectively respond to that identified risk. But if at all, if there is an ineffective response to identified significant risk, then again that is in a way, this is also nullifying point 2. What is the point of doing the risk assessment then, if you are not responding? So indicators are ineffective control environment, then ineffective risk assessment process, then ineffective response to the risk assessment process, then correction of prior paid misstatement. Why is the fourth point considered as an indicator? Yes, please. Why is the fourth point, consideration or correction of prior period misstatements arising due to fraud or error, why is this as an acting as an indicator of significant deficiencies during the year, that is relating to prior period misstatements? Correction of prior period misstatements.
If there is proper controls placed, it would have been detected in the previous year itself. Uh, which which means that since it is detected in this year, that no, there are no proper internal controls put in place.
Right. So if the prior period misstatements we are finding now, the misstatement which relates to prior period, that means what, the misstatement could still lie in the current year. The misstatements could also exist in the current year also, if it all pertains to prior period, and that means what, internal control might still now be deficient. Still maybe there may be significant deficiency, and therefore if at all you are doing correction of prior period misstatement, that is an indicator that yes, still your internal controls could be deficient. Then management is not able to foresee the financial statement preparation, how it is going to prepare the financial statement, what all disclosure they have to make, what all points that they need to consider. Management is not able to do that. That shows that management is not capable enough, and is again a very very important indicator if management itself is not capable enough. And then lastly, misstatements detected by the auditor's procedure were not prevented, detected or corrected by the entity's internal control. So that means what, detection risk is lower. That means auditor's procedure is able to detect the misstatements, but they were not even prevented, detected or corrected by the internal controls. So this is relating to the point where, for inherent risk, to reduce the inherent risk, we implement controls. And because of inherent limitation of internal controls, there are also control risks, which together we call it was risk of material misstatement. And if we find a ROMM to be more, then we do what, we try to reduce our detection risk by applying more further audit procedures. By applying further audit procedure, we try to reduce the detection risk. So that is what they are saying, that auditors procedure were able to reduce the detection risk. However, this risk originated from where? This risk originated from CR, not from IR. This risk originated from CR, which we were able to reduce, but this risk originated from CR control risk, and this control risk could still be leading to any sort of material deficiency, significant deficiency. Are we clear? So what, how we can now learn? Let's try to learn all the points. This is one guy, you can see here, he's so deficient in all sort of nutrients, malnutrition guy. You can see so thin. So malnutrition guy was listening to one song, a rap, was listening to rap in his mi headphone, and he was also trying to eat the ice. While eating the ice in such a hot summer, while eating the ice, he was just roaming in the road and trying to listen to the rap in on a mi headphone. Suddenly one vehicle came from beside and gave horn pp. So he suddenly responded to that horn, responded to that horn, and prevented himself, detected that horn, and corrected himself. That means now he just moved aside, prevented himself, detected the risk, and corrected himself. So all the points are covered here. You can see mi here is what? Management inability. Management inability. Ice will be what? In ineffective control environment. Ineffective control environment. Rep is what? Risk assessment procedure. Risk assessment procedure. Then PP here is prior period misstatements. Responded, that means you are not responding to the risk that you have identified, responding to identified ROMM. And then PDC, that you are able to prevent, detect or correct, but the controls are not able to prevent, detect or correct. Auditors procedure are so sufficient that they are able to detect the risk. However, that the risk arise from the controls which were not able to prevent, detect or correct the misstatements. So if anyone wants to try to learn this way or any other way, then try to write, then we'll move forward.
Yes, sir.
So let's come on to this communication or deficiencies. So how are we gonna communicate now? Deficiencies in internal control, how are we gonna communicate? So the auditor shall communicate in writing, important. Communication or significant deficiency, the deficiency has to be communicated in writing always, so that it acts as a proof of us in detecting those deficiencies, and later on can act also as a defense tool by the auditor, that they have communicated the deficiencies in the internal control. Later on, if they have not clarified or not corrected the same, then that is their problem, not the issue of the auditor. So the auditor shall communicate in writing significant deficiency in internal control identified during the audit to the TCWG. There, here it's talking about what? Communication to TCWG. Now he also says that you shall also communicate to the management also at an appropriate level, obviously. So management also has to be communicated on a timely basis, particularly in writing only, all the significant deficiencies that the auditor has either already communicated to the TCWG or he intends to communicate to the TCWG. That means what? He has already communicated to TCWG, then he shall also communicate to management, or even if he intends to communicate to TCWG, that deficiency, that he can also communicate the same to the management. He has communicated or intends to communicate. Similarly, any other deficiency, that is other than the deficiency he intends to communicate to TCWG or communicated to the TCWG, other than those deficiencies in the internal control which has been identified during the audit that have not been communicated to the management by other parties. That means what? Suppose internal auditor did not communicate any sort of deficiencies to the management. Now you came across certain deficiency and you find that, okay fine, even if it has not been communicated to TCWG, or we not even intends to communicate to TCWG, because that is not a significant deficiency, these are what? Other deficiency, other deficiency in the internal control identified during the audit that have not been communicated to the management, but in our opinion, but in our professional judgment, are sufficient importance to merits management attention, at least management's attention. That means in our opinion, this should be brought into the attention of the management also. Are you getting all the points? Firstly, it says that you have to communicate to TCWG, you'll have to also communicate to the management. If now, for what? For what all communication you will make to the management? All this significant deficiency in writing, all the significant deficiencies that we have already communicated to TCWG or we intend to communicate to TCWG, and also in other deficiencies cases, other deficiencies where no external party has still now communicated to the management, but in our opinion, in our professional judgment, we feel that the management attention has to be brought for this matter. Management attention to this matter has to be brought, and therefore we will communicate the same to the management. Clear? Now come to on to the level of detail at which to communicate significant deficiencies. Now, how much detail, how much in-depth communication has to be made? Detailed communication or normal? In-depth communication or shallow, hollow? So the level of details at which the communicating significant deficiency. Now, this is a matter of again your professional judgment. That in-depthness of the communication you want, or you want not that detailed communication. So it is a matter of your professional judgment in the circumstances according to your circumstance, whatever it occurs. Now the factors they can ask, till now this has not been asked. Again, I will tell you, this is an important probable future question, not yet asked in any platform, be it MTP, RTP exam. So straight away they can jump onto the new question, and if they are really want this, I have taken from the annexure, from the appendix, um, taken the question right from there, from the bare standard, and which I feel that could be important, could be asked by the institute, because again it says what factors that the auditor may consider in determining an appropriate level of detail. That means how much detail you should try to communicate, how much in depthness it should be there in your communication. Examples are there. Example: the nature of the entity. So the if what do you feel, if the entity is public interest entity, suppose entity is public interest entity versus the entity is private entity, who do you think in whom do you think, in which entity I'll be communicating in more detail?
Public.
Public interest entity, right? Similarly, where do you feel I'll communicate in more detail, where the entity size is more or less, and entity is complex, more complex or less complex? Yeah,
More complex.
more only, right? Then similarly, the nature of significant deficiency, what is the nature that the auditor has identified what the deficiency is, what is the nature of the significant deficiencies? Then entity's governance composition, who all are there in the BOD, who all are there in the audit committee, composition of the board of director, composition of the audit committee. For instance, more detail may be needed if TCWG include members who do not have significant experience in the entity's industry. Right? If the board of directors do not contain those directors, those members who have sufficient detail, who have that in-depth detail, then we will if they do not have that much sufficient expertise, or in the board do not have that much proficient directors, then we might have to give the communication or communicate in detail, right? And then legal or regulatory matters requirements regarding the communication. 5 points are there, can be asked straight away for 5 marks, very very important. Now when to communicate, that is very very important, and straightforward MCQ has come, not straightforward but a very lengthy MCQ you can say has come in RTP, as far as I remember. So when to communicate, that question was from case study booklet only, although it came recently in RTP, but that was from case study booklet. Now when to communicate, for the purpose of listed entities you should communicate in accordance with SS 265, you should communicate before the date of approval of FS. That means for financial statement approval we have, I believe, 60 days from the financial statement end. So May, June, April, May, so 31st May, June, by what time the financial statement gets approved, before that only you have to communicate to the listed entities. Sorry, 60 days is for filing of the financial statement, approval is done on the AGM. So before the approval is done in the AGM, you have to do what? You have to communicate with the TCWG and management regarding significant deficiencies in internal control. And for other entities, be it public company, be it private company, doesn't matter, you have to communicate before assembly of the audit file, 60 days from the date of audit report. You already know when is the last date for the audit file compilation. So before that you have to also do what? Communicate with TCWG and management regarding significant deficiencies in internal control. Are we clear? Very very important. These two I believe are important for your next attempt. Now last question, try to read once and please explain me. That is more or less similar to the concept what we you would have studied in IPCC, letter of weakness. Letter of weakness, if you are able to recalling, if you are able to recall this letter of weakness, that is what we learned in IPCC. Please read this once and make me understand. Have we gone through it, Dhanlakshmi? What are they trying to
So
say?
it is,
Yeah.
so they are actually saying ki
uh, the auditor is kind of like he's giving disclaimer types, like whatever he has identified
Hmm.
with respect to the deficiencies in internal control system,
Hmm.
which require sufficient importance.
Hmm.
He's also saying like he's not giving any comment on internal control system. Like he's not expressing an opinion on effectiveness of internal control. Like it is not his job to comment on the internal control system.
But then why is he uh, assessing the internal controls or finding any deficiencies in internal controls?
So he's doing so because if the internal control system is strong, then he has to perform the audit procedures. Like it is not required in much like
Detail. So right,
in
for
detail.
determining his
Huh.
further audit procedure, how he should proceed further with his further audit
Proceed.
procedures, he was just
Hmm.
assessing the internal controls for that matter. And while assessing those internal controls, while checking the operating effectiveness of the internal control, while doing the test of controls, while doing the compliance procedure, he came to know about the internal control deficiencies, and that is why he is communicating. It is not his responsibility to express an opinion on the internal controls, right? So see, we have to clearly learn these points, because this are asked is also, this answer is also there in the chapter 3, weakness, letter of weakness. This is also called letter of weakness. Why? Because this is submitted in writing, right? We have to submit this in writing, so it in a letter form. And also it is what, weaknesses in internal control, deficiencies in internal control, so it is also called as letter of weakness. So writing communication of significant deficiencies in internal control has to be done, where you will first of all mention DD. DD here is what, description of the deficiency. Description of deficiency. You will describe clearly what the deficiency is. First of all, you will describe it, that there is a lacuna in approval process of the invoice. There is lacuna in the approval process of invoice. So description of the deficiency and an explanation of their potential effect. This could affect in how much terms, in monetary terms or whatever terms you want to explain the potential effects, but you have to also explain the potential effects. And then sufficient information to enable the TCWG and management to understand the context of the communication. So they should be able to understand that I am not complaining here right now. I will try them to convince that okay, I am communicating with you, and the context of the communication is with regard to make you aware that there is a deficiency in internal control. I am not complaining, but I am making you aware regarding the deficiencies in internal control. Then the purpose, in particularly, I have to explain that the purpose of audit was, for me the purpose was to express an opinion on the financial statement. For me, the purpose was not to give opinion on the operating effectiveness of internal controls. However, for the purpose of expressing opinion on the financial statement, I had to perform further audit procedure. And in order to determine further audit procedure, I had to go through internal controls, and there I found certain deficiencies in internal controls. And for that matter, I am reporting only those deficiencies in the internal control which I found during the course of my audit procedures that I was following. However, there could be more deficiencies. There could be more deficiencies. These are not an assurance that there are no more deficiencies left. So all this point you have to deal with this and communicate the same to the TCWG. So that is what in the second point say, audit can included consideration of internal controls relevant to the preparation of FS in order to design the audit procedure that are appropriate in the circumstances, but not for the purpose of expressing an opinion on the effectiveness of internal controls. Similarly, matters being reported are limited to those deficiencies that the auditor has identified during the audit and that the auditor has concluded are of very much important, and those deficiencies I have communicated to you, whichever I find that yeah, that is important. Clear? So you want a break, or we can communicate, we can continue with essay 299. Can continue. Yeah. So let's start with essay 299, joint audit of financial statements. Joint audit, joint auditor, right? So what do you mean by joint audits? Joint auditor or joint audit? Yeah, joint audit. Must have gone through this now in IPCC also. बोलो भाई.
Two or more are doing the audit.
Two or more auditors to perform
Doing
the
the
audit.
audit.
So can I say I am doing the audit of head office and the branch auditors are different. The branch auditors are different. So can I say this is a joint audit?
No, sir.
Huh?
No, sir. Only if they're performing joint audit of head office, then they are deemed to be joint auditors.
So not particularly there. This can be a joint audit more or like for this the amount of information that I gave you. This is like the principal auditor and other auditor. However, this could be a joint audit where we are appointed as joint auditors and we have divided our division of work is such that you as a joint auditor you will deal with what head office and I'll deal with all the other branches. So if that is the case, we are appointed as joint auditors and we have then individually assigned the work or divided the work as such, then it will be a joint auditor. However, in most of the cases where principal auditor is for the head office or the main auditor, and for branches there are other branch auditors appointed separately as an individual auditor, not a joint auditor, then that would be called as what? Principal auditor and other auditor. And this is dealt separately in SA 600. So this is dealt separately in SA 600 where the audit is being done by other auditors. However, for this SA 299, single entity, single financial statement, but auditors are more than one. Single entity, single financial statement, but auditors are more than one. So appointing more than one auditor to conduct the audit of large entities, this standard does not deal with the relationship between a principal auditor who is appointed to be reported on the financial statement of the entity. That means what? Head office auditor, you can say, or the main auditor, and another auditor. That means you can say, for example, branch auditor, or you can also relate it to the subsidiaries auditor. This is the principal auditor, or you can say main entity holding company, holdco auditor, and another auditor could be what? Subco auditor. Clear? Now the requirements you will see: audit planning, risk assessment, and allocation of work. Audit planning, risk assessment, and allocation of work. So involvement of the engagement partner and the key members of engagement team. Key members of the engagement team. So key members of the engagement team, I find that Arnab is not key member of my engagement team. So I'll have to take all the key members of the engagement team with me, and also me as an engagement partner has to get involved. For the purpose of what? For the purpose of planning the audit. For the purpose of planning the audit. And then we have to establish one strategy. Jointly we will establish overall audit strategy which will set the scope, timing of the audit, and similarly direction in which the audit will go into, and guides the development of overall audit plan. Straight away come to this development of audit plan. For this I want you first to cover SA 300 one question. SA 300, come to here, page number 37, preliminary engagement activities. What do you mean by preliminary engagement activities? Yeah,
Before accepting the audit.
before accepting the engagement activity, what we should do, or sorry, not before accepting. Before accepting we were already doing those four things: integrity, competency, ethical requirement, independence, right? Integrity, competency, ethical requirement, independence. After acceptance, before starting with the audit, we should try to assess these activities, or you can say uh, at the starting point of the engagement, what all activities you should perform as an auditor. So we should perform procedure as required by SA 220 regarding whether we should accept or continue the client. Similarly, we should see whether we have complied with all the ethical requirements. Are we now complying with all the ethical requirements? And lastly, we should have an understanding of the terms of the engagement as required by SA 210. So auditor shall undertake the following activities at the beginning of the current audit engagement. At the just beginning of the current audit engagement, you should first see whether you have performed all the procedures or not as per SA 220, whatever procedure that was required here. Do you remember integrity, competency, ethical requirement, and independence, right? Integrity, competency, ethical requirement, independence. These 4 points we were to see in SA 220 regarding whether we should accept or continue the client engagement or not. We have to now assess, yes, we have done this SA 220 compliance. Similarly, later we will check whether we are complying with all the ethical requirement, independence requirement. Are we not the disqualified auditor under section 141 subsection 3? Are we eligible auditor, qualified auditor, ethical required auditors? And thirdly, we should get an understanding of the terms of engagement in accordance with SA 210. What is our responsibility? What is the management responsibility? What is the characteristics of the engagement, scope of the engagement, timing of the audit, whatever, all the points, right? So these three actually is what your preliminary engagement activity. Very, very important. This has been asked for 4 marks for few times. Now we'll be doing with SA 300 deals with what? Planning activity, planning. So in the planning activity, we have to perform a we have to establish overall audit strategy. Now there is a difference between strategy and difference between planning that we'll see later on while when we study SA 300. Right now we are dealing with what? We are dealing with what factors you should consider while establishing an overall audit strategy. What factors you should consider while determining overall audit strategy. So I should identify the characteristics of the engagement. Characteristic will also define the scope of the engagement, right? So I should identify the characteristics of the audit, what audit is being performed by me here. And similarly, that characteristic will also help me define the scope, what all is there in the scope of my audit. Then you should ascertain the reporting objective. Why are we reporting and to whom all are we reporting and what is the objective of the reporting? Objective of reporting the audit results to the shareholders or to the readers of the annual report, audit report. Then what is the reporting objectives of the engagement to plan the timing of the audit and the nature of the communication that is required. How are you gonna communicate? In depth, in detail, orally, locally, or written? How are you gonna communicate? And then consider the factors that are significant in directing the engagement team's effort. Important. What are the factors that help you, that drive the motivation within you to keep your directions in the entity to the goal of the entity? So what are all those important motivational directional points? And then consider the results of the preliminary engagement activity. Just now we studied preliminary engagement activity, right? Preliminary engagement activity, what are the results? Yes, Krupali?
Sir, actually, I faced network issue. We started with 299 now.
Yeah, 299 only. There was the question was there. For that, I am referring this because the same answer will be continuing with that only. Just for this purpose of sake of the answer learning, I am coming here. We'll
Okay,
go
sir.
there again. So SA 300 only, we have seen what preliminary engagement activity and now the establishment of the overall audit strategy, what all we should include. So first of all, for deciding the strategy of the audit, we are determining the characteristics of the audit and that will also help me determine the scope of the entire audit. Secondly, reporting objective, who to whom to report, why we are doing the reporting, and the nature of the communication that is required. Thirdly, consider the factors that drive the efforts within me, engagement team's effort. And then consider the result that have arisen after we have performed the preliminary engagement activities and whether the results of the preliminary engagement activity suggest me that the results of the preliminary engagement activity can suggest me how much in-depth the audit could be done or how much detailed audit could be done, right? Scope of the audit or what strategy I should adopt. Similarly, whether knowledge gained on other engagement performed by the engagement partner, knowledge gained on other engagements, other means not on this audit but similar to this audit. Suppose I am doing the audit of iron and steel industry, iron and steel company, then similarly if the partner engagement partner is have already done similar audits in the past of iron and steel company, then what all knowledge which has been gained by him can be used by the firm, can be used by the CA firm for their what is relevant knowledge that he has already gained in other audits. And similarly, lastly, ascertain the NTE of resources necessary to perform. What all resources you need, how many number of article assistant you need, how many number of staffs you need, number of employees for the purpose of completion, finishing of this audit. Are we clear? So let's try to learn all the points. Let's try to learn. You can learn this by way that preliminary engagement activity results came. So result of the preliminary engagement activity came, and I failed in the preliminary resultant activity, or sorry, preliminary engagement activity. I failed, and therefore now I have to deploy the significant team efforts. So I've decided that with the significant team effort and with the necessary resources, along with the necessary resources and with the team effort, with the team effort and plus with the necessary resources, I will be converting my CRO to engagement partner. Conversion of CRO to engagement partner. Are you getting this? What does I want you to convey? Conversion of CRO to EP. Yes. CRO means what? Your central registration जो रहता है ना अपना CRO number, SRO, CRO, WRO, ERO, NRO. So I'll be converting my student registration number to membership number. That is, I'll be becoming engagement partner. So from student, I'll be converting now the CRO to engagement partner. That means I will become CA by the significant team efforts along with the necessary resources that I need because I failed during this preliminary engagement activity. So here we'll just try to bifurcate all the points into point wise. So preliminary engagement activity results are is the point number fourth point. Team effort, significant driving the team efforts. That was the third point, right? Then necessary resources, last point. CRO here is what? Characteristics of the engagement. And RO is what? Reporting objective. Engagement partner, you will see what? Engagement partner experience in past on similar engagements can benefit the firm, right? So if you have gone through the answer, just go through that point again. Read this point and see whether the answer is same, more or less same, except for point number 1, because since this is a joint audit, so that is why the answer is a bit different. Except that point B, C, D and D, you will find the same points. So you are able to learn two answers for two questions. Here development of audit plan in the case of joint audit, and in the case of normally audit, how will you develop audit strategy? Factors that you will consider for development of audit strategy. And here factors that you will consider for development of audit plan. Just go through these 5 points again. Same or not? Fast, fast, fast. After this standard, we'll take a break. Breakfast break. Yeah, same points, everyone. Have you all learned also? Yes, Sagar. Tell me the answer for this development of audit plan.
So not yet learned, sir.
Try to recall, na. Just now we did. Whatever points, how many points you recall? Out of 5 points. First point is very much different because of the joint audit. Here in the case of joint audit, so we have to divide the audit areas. Joint audit that means for more than one auditor. So not all the auditors will do all the work. Work has to be divided amongst the joint auditor. So you and me are the joint auditor, Changu Mangu are the joint auditor. So Changu will do certain work and Mangu will do other work. Common audit area, certain areas would also be there where Changu and Mangu both will work together. Except then, apart from that other point, what was there? Preliminary engagement activity results came, right? So considering the results of the preliminary engagement activity and the engagement partners results or experience in the past, engagement partners experience in the past, that might help us in doing the audit better. Then preliminary engagement activity results came and we found that what I failed. Therefore, in this attempt, I will be doing with much significant team effort and with all the necessary resources. So significant team's effort, one point was there, which is what driving the efforts within the team. What is the factor that is driving the efforts within the team, engagement team? And one was necessary resources, considering the necessary resources, nature, timing, and extent of necessary resources actually. Considering the nature, timing, and extent of necessary resources that needs to perform the engagement, right? Then CRO से engagement partner बन के रहूंगा, right? CRO से engagement partner. So CRO, C से characteristics of the engagement, RO से reporting objective of the engagement. Everyone, yeah. Try to link this with that and try to also write just right now. Could be written as same as audit strategy. This answer is what? More or less same as now assessment of ROMAM. Okay, fine, you can read on your own. Come to this. This is important. Engagement letter and MRL, management representation letter. MRL is was management representation letter. Engagement letter, management representation letter. Will this be issued different to different joint auditors? That means me and Sagar were the joint auditors. What do you think? Will the client issue different engagement letters, SA 210, to both of us? Or will they be issuing different representation letter, confirmation letters, management confirmation, management representations? Or do you think that will be issued in the same only? Yeah,
So it would be common.
common, right? So it will be a common engagement letter and common management representation letter. Just remember this if at all they ask you in the MCQ. Now let's come to allocation of work. Allocation of work. So first of all, I told you what Changu and Mangu are the joint auditors. So they will try to divide the audit work, right, by mutual discussion. Mutually, they will try to first divide. So mutually, they will divide the audit work amongst themselves. So Changu will do suppose building A. Changu will suppose do the audit of building A, and Mangu will suppose do the building audit of building B, which is in Bandra, and another one is building is in Powai, suppose in Mumbai. So both the audits will be done by Changu and Mangu as a joint auditor. They will try to divide this the work through mutual discussion. Now the division of work would usually be in terms of audit of identifiable units or specified areas. So which is identified or specified. If at all these are not identifiable, these are not specifiable areas or units, then you can simply divide the work based on asset, liability, expenditure, income. I'll be doing asset and income, you do expenditure and liability. Asset and income, expenditure and liability. So in some cases, due to the nature of business or the entity, after such a division may not be possible. In that case, you can divide based on asset, liability, income, expenditure. So asset or liability may be done by Changu and income and expenditure can be done by suppose Mangu. Now certain areas of work, because of they are so important, this should not ideally be divided. This should either be instead be done by both the joint auditors. So Changu and Mangu has to perform both Both has to perform audit procedures on this certain important work, which should not be detected, which ideally cannot be divided. So certain areas of work, owing to their importance, there are so much of importance, or owing to the nature of the work involved, would often not be divided and should be covered by all the joint auditors commonly. And at this stage, risk of material misstatement, that is ROMM, needs to be considered and assessed by each of the joint auditors. So ROMM has to be considered by both me as well as Sagar, Changu as well as Mangu. So it's not like ROMM will be separately assessed based on the areas identified. No, ROMM means what? ROMM means what? I have told you, inherent risk and control risk. Inherent risk is what? Risk within the entity inherently due to business operation, due to laws and regulation that applies to the entity, due to regulations like IRDI, RBI might have on the banking or insurance companies, due to the characteristics of the business model, environment. So these are what inherent risk. And control risk are the risks that the controls will not be able to detect, prevent or correct the misstatement. That the controls will not be able to detect, prevent or correct the misstatements. So those are what control risk. So this ROMM needs to be considered and assessed by each of the joint auditor and shall be communicated to other joint auditor. This ROMM should be considered by both the joint auditor, because these are not work related specific. These are entity specific and should be done both. Should be done by both simultaneously. And also to be documented. Very important. The question on May 19. In May 19 was on documentation only. If this work allocated is not documented, then what happens? What do you think? If this work allocated is not documented, then what might can happen? Yeah,
Accountability issue.
accountability issue. So who will be held accountable for asset and liability? I will say no. I was to do assets and expenditure. You were to do liabilities and expenses. Sorry, liabilities and income. So I did assets and income. Now income and liabilities were also done by other auditors. So now both are doing conflict. So instead of this, it should have been written, right? It should have been documented what areas will be covered by the other joint auditor and what areas will be covered by the single joint auditor. So after identification, allocation, work among the joint auditor, work allocation should be signed by all the joint auditors and the same shall be communicated to TCWG. Now documentation, as Arnab told, will avoid such kind of dispute. Now dispute could arise between me and my other auditor, right? Dispute could arise between me and my other auditor. Similarly, dispute could also arise between us as a joint auditor and between the management. So us as a joint auditor versus management, or me as an auditor versus my other joint auditor. So the dispute can arise and documentation can avoid these disputes. This was May 19 question. Very important. If documentation is not done. Now let's come to responsibilities or coordination among joint auditors. So responsibility wise, I'll say each joint auditor shall be responsible only for the work allocated to the such joint auditor. Now you will not be held responsible for the work done by your co-joint auditor, right? You will not be held responsible. Why? Because he is also chartered accountant. You can rely on the work performed by him. You can rely on the work performed by him. He is also chartered accountant. He is your brother only. You can have some reliance. So you are not required to perform the work again, or in secondary terms you can say what, you will be held responsible only for the work which is allocated to you. You will be held responsible only for the work which is allocated to you, including proper execution and including determination of the nature, timing, extent of the audit procedures. NT. Now, however, all the joint auditors will be held jointly and severally responsible. That means what, here we are going to consider all the common responsibility points. All the common responsibility points. So, just tell me, do you think the common areas which are not divided, the audit will be performed by both the joint auditors? So, don't you think the responsibility of will be of the both the joint auditors, right? The common areas which is not divided owing to their importance or owing to the nature of work involved. Remember, certain areas owing to their importance or owing to the nature of work which is involved in that work cannot be divided and has to be performed as a common area to be audited by both the joint auditors. Therefore, in that case, for that matter, the responsibility will be of both the joint auditor. The responsibility will be of both the joint auditor, where the work is not divided and is carried out by all the joint auditors. Common audit areas. Now, decisions taken by all the joint auditors under audit planning. So, audit planning, you all were involved, right? Engagement partner, the engagement team of both the joint auditors were involved in the audit planning. So, for audit planning, you cannot deny or you cannot run away from your responsibility for the audit planning in respect of common audit areas. However, planning or deciding NTE of divided area. What do you think? This point, second point, leads to what? For common audit area, whatever nature, timing and extent of audit procedure you determine whatever you want, but that will be held commonly responsible. Joint responsibilities arriving. But in case where the divided area, and there I am deciding the nature, timing and extent of the audit procedure, who do you think will be held responsible, me or the joint auditors in all? Are you
So all
getting?
the joint auditors,
Huh?
all the joint auditors, no?
For what?
So for the work that has been predetermined, that would
Divided
be
areas also, you are saying for divided area of work where you have decided the nature, timing and extent of the work that you need to perform for your divided area of work. What do you think, who will be responsible, both the joint auditors or you only?
so the area that has been divided individually, then the auditor मतलब individually होगा, और जहाँ पे अगर प्री डिसाइडेड है कि अगर जॉइंट ऑडिटर्स जॉइंटली रिस्पॉन्सिबल होंगे, वहाँ पे वो वही होंगे.
So that is what I am asking. It is no, I am not asking for common audit areas. I am asking in the areas for specific for that is divided areas of work. If you are deciding the nature, timing and extent of the audit that you need to perform for the divided area of work, who will be held responsible for those planning, for those deciding the NTE of audit procedure? You or both the joint auditors?
So both the joint auditors.
That specific joint auditor, then Lakshmi is right. Why will I be responsible for your work that you are deciding the audit procedure, you are performing the audit, that you will be deciding the NT according to you? Why will I be held responsible along with you? I'll be held responsible if I was involved in the NT of deciding NT of audit procedure. Whether I was involved, no. I was involved when the we were both deciding the NT of audit procedure of common area. Clear? Now, the third point was matters which are brought to the notice of the joint auditor by any one of them and on which there is an agreement among the joint auditors. So, suppose we three are the joint auditors, Dhanlakshmi, Sagar, and me. And suppose Dhanlakshmi came to know about certain point regarding my area of work, and Dhanlakshmi ran and came to me, sir, this is the audit area of work which pertains to you. However, I found certain points regarding this which you should consider, and I considered those points, and I completely agree with the Dhanlakshmi. I completely agree with Dhanlakshmi, and in that case, all will be held jointly responsible. If at all you are coming aware about certain information and you are bringing it to the notice of other joint auditors, then if other joint auditor is agreeing with those points, then you both are aware about this point now, and therefore you both will be held jointly responsible. Are you getting it? That matters which are brought to the notice of the joint auditors by any one of them and on which there is an agreement among the joint auditors. Clear? Or any doubt? Kapil, right? So on Sundays also library is open or what? So 3 points we have covered. 3 points. First was what? For common audit areas. For common audit areas, all the joint auditors will be held jointly and severally responsible. For common audit areas, the audit planning that you will be performing, the nature, timing, and extent of audit procedures that you will be deciding, that you all will be deciding, everyone will be held jointly and severally responsible. And thirdly, the matters which came to the notice of Dhanlakshmi and was brought to the notice of other joint auditors, then all the other joint auditors, if they are agreeing with the point of Dhanlakshmi, then all the auditors will be held jointly and severally responsible. Then the other 2 points is with respect to financial statements. The other 2 points is with respect to financial statement. Don't you think the financial statement reporting framework, FRF, deciding on that, assessing the FRF, all should be held responsible, right? Or everyone should be held responsible. It relates to financial statement, which is not divided. So, examining that the financial statement comply with the requirements of the relevant statute, it is as per AS, as per Ind AS, it all the disclosure, it is as per Companies Act or not, everything. So, don't you think this should be the joint responsibility of every auditor? And similarly, presentation and disclosure requirement of FS as required by the applicable FRF. Again, this is also joint and several responsibility of all the auditors, because all the auditors will in a way go through the entire audit report at once. So regarding financial statement, both the points you have the responsibility. Similarly, for audit report, sixth point is with respect to audit report, complying that the audit report complies with the relevant reporting format as per SA 700. So audit report complies with the requirements of the relevant statute, the applicable standards on auditing, other relevant pronouncement issued by the ICI. So financial statement, both the points you all will be held responsible. Audit report also you all will be held responsible. And lastly, say it shall be the responsibility of each joint auditor. That means not common responsibility. Each joint auditor's responsibility to determine the NTE of audit procedures to be applied in relation to the areas of work allocated to the said joint auditor. What I asked you, Sagar, right? So the area of work which is specifically allocated to you and the NTE of audit procedure that is determined, decided by you, you will be held responsible, not me, not all the joint auditors. Similarly, it is the individual responsibility of each joint auditor to study and evaluate the prevailing system of IC and assessment of risk related to work allocated. Clear? Common responsibility, joint and several responsibility. Now read this first point. I have already told you with the example of Dhanlakshmi. Dhanlakshmi came to know about one point, then it is her responsibility to make other joint auditors dealing with such area of work. Although she might not be dealing it, but she came to know about certain point with respect to that area of work. And if I was dealing on that area of work, then Dhanlakshmi should tell me, should inform me about that area of work. Any discussion point that she come across. So where in the course of the audit, a joint auditor come across matters which are relevant to the areas of responsibility of other joint auditors, which deserve their attention or which require disclosure requirements discussion, then the said joint auditor shall communicate the same to all the other joint auditors in writing prior to the completion of the audit. So it should be communicated to all the joint auditors and before completion of the audit. So this we have covered. This also we have covered. This is repetitive. Just covered above. Just above. Now I want you to read this, read this and solve last second question. Excellent Bank Limited. Last second question you need to solve by going through this reporting requirement. Yeah, shall we go to question? See this question. Bank appointed 3 joint auditors. All 3 joint auditors divided the work with mutual consent. Verification of consolidation, however, remained undivided. All branches and zones were divided among 3 joint auditors. During audit of zone CZ, one of the joint auditors expressed a concern about internal control in one of the large corporate branches. Other 2 joint auditors were not in favor of reporting, and decision of not reporting the same was taken on the basis of majority. That means what? They decided that okay, 2 joint auditors are telling you not to report, then you should go with the majority. You should go with the majority. Subsequently, fraud has been detected in the said branch, which was audited by CAZ. The bank seeks your advice about responsibility of the three joint auditors in the above situation. Can read again and anyone come up with the answer. Yeah. What do you think, Pooja? Anyone? Jointly and severally liable Dhanlakshmi.
Sir, CAZ will be responsible as CAZ has audit of the branch, and in the reporting segment it is written that if any auditor, joint auditor has audit of the branch, then it will be deemed that it has been comply with all the comply with true and fair view of the financial statement. So other joint auditor can assume that that branch is sufficient enough for audit purpose, and now only the JED will be responsible.
But they have all agreed on the point, na? That fine, okay. They have agreed on certain point which was discussed by all of them. So I told you what if on a certain matter, if on a certain matter it is brought to the notice of other joint auditor and they have all agreed on the same, then it will be then joint and severally responsibility of all the joint auditors. They all agreed now, okay, we'll go with the majority view. Other two joint auditors' opinion were also considered. They told that this should not be reported. And decision of not reporting was taken in considering that this was a majority decision. So not an individual responsibility. This they all will be held jointly responsible. However, Mr. Z or CAZ could have avoided his responsibility by what? By doing what? CAZ could have
Issuing
avoided his
separate
responsibility.
report.
By issuing a separate audit
Separate
report.
report. Audit report, yeah.
By issuing a separate audit report. He should have issued a separate audit report. So let's see the answer. Responsibility of joint auditors and reporting requirement. You will write the responsibility and then conclude by saying in the present case Mr. Z was required to issue a separate report. He was not bound by the views of the majority of the other joint auditors. There it is separately specifically written that you are not bound by the views of majority and Mr. Z will be held responsible for non-reporting of the matter. Alternatively, it may be concluded that all the three joint auditors will be held responsible. So they are giving two answers. They have also given the answer what Arnab was saying, that Mr. Z will be responsible because it was relating to matter reported by him, non-reporting of the matter which relates to his area of work. But as far as my opinion considers, it should be joint. They should all be jointly responsible because everyone was aware about the matter and the decision of not reporting was taken with the consent of everyone, right? Anyway, what you have to write is this entire point, re, responsibility as well as this reporting requirement, that the joint auditors need to issue a common audit report. There is a responsibility of all the joint auditors that they will be issuing a common audit report only, not separate report. However, if at all you are not, if you are not agreeing with any of the points, if you're not agreeing with any of the points of the other joint auditor, then yes, definitely you can issue a separate audit report. But please give reference to the audit report which is issued by other joint auditors. You have to give reference to the audit report that there is another audit report which is issued by Miss CS X and CAY, right? CAXY the na? Which is issued by CAX and Y. There is another joint audit report which is issued by CAX and CAY, and such reference shall be made under the heading other matter paragraph as per SA 706 EOMP OMP para in the independence auditor report. This is the name of the standard. However, in this standard we will discuss what? OMP para and EOM para, and you have to disclose in OMP other matter para this point that there is a separate audit report issued by other two joint auditors. This point has to be disclosed in other matter para separately, very very important. Anyone knows difference between OMP and UMP? Emphasis of matter para and other matter para. Anyone?
EOM matters are already disclosed in the financial statements, or the
हाँ.
matters that are required to be disclosed in the financial statement, or OM para are the matters that are not required to be disclosed.
So basically, that Sagar said that it is disclosed in the financial statement, but auditor wants to insist like for in मतलब वो सबके सामने लाना चाहते हैं कि ये बहुत important है. This is significantly important
That
for
is
the
what?
shareholder to
EOM.
view. Yeah, EOM, yes sir.
Yes,
And
sir, EOM.
what is OMP?
So the matters that are not disclosed in the financial statement, but forward disclosures are important in the view of the professional judgment.
So the last point is just a bit swayed. You can say, see, EOM matters have no effect on financial statements. In OMP, you are saying, Pooja? So matters disclosed in the financial statement in the case of emphasis of matter para, yes, they are there in the notes to account, they are there in the financial statements. The matters are there in the financial statement disclosed. However, in the view of the auditor, it is of such a sufficient importance, it is of so much of importance in the readers of the annual report, in the readers of the auditor's report, that the auditors wants them to bring into the attention of the readers of the auditor's report. According to the auditor's professional judgment, it is important matter that should be brought to the attention of the readers of the auditor report. That is what EOM para. However, in other matter para, these matters are not disclosed or presented in the financial statement, and they are not even required to be disclosed or presented in the financial statement, because these matters are not related to financial statement. In fact, these matters are related to auditors. In other matter para, you will be disclosing the matters which require disclosure in the auditor's report with respect to matters with respect to what? Audit, auditors, or audit reports. So matter with respect to auditors or audit report, and these matters are not already presented or disclosed in the financial statement, but in the opinion of the auditor's professional judgment, he feels that these matters with respect to auditor's opinion, or audit report, this should be brought separately, or this should be brought into the attention of the users of the financial statements. This should be brought into the attention of the readers of the annual report, audit report, and therefore only with respect to these matters he can write in the other matter para, om para. So don't you think this point what we are saying, that there is a separate report issued by other auditors, don't you think this is relating to auditors, audit reports, which is not already presented in the financial statement, not already presented and disclosed in the financial statement, but in the auditor's professional judgment this has to be reported? And that is with respect to what? Audit report, auditors opinion, auditors, not auditors opinion, but auditors, or audit or auditors report, right? So that is why we are disclosing, where we are disclosing in other matter paragraph. Remember this. Clear everyone? Any doubt? I'll ask again, SA 706, I'll ask again, what is the difference between OMP and EOM? Any one of you should be able to answer now. EOM, all matters already presented and disclosed in the financial statement, how, and in the opinion of the auditor, it is of such a sufficient importance in the opinion or in the judgment of the auditor, that it should be brought into the attention of the users of financial statement. Similarly, in the case of other matter para, these matters are not presented or disclosed in the financial statement. However, these matters relate to auditors or audit reports, and needs attention of the users of the annual edu or audit report. Okay. Now, review of work by other joint auditors. I told you, whether are you required to review the work performed by your other joint auditor? Yes.
No, sir.
No. Why? Because Why?
So because we assume that the work done by the other joint auditor has been as per regulations or provisions
Stand as per
or
SA.
done in well manner.
But why do we assume that you can have faith on your brother? That is simple as that, right? So that the work other joint auditor is also your brother only, chartered accountant. You can rely on him. So each joint auditor is entitled to assume that the other joint auditors have carried out their part of audit work and the work has actually been performed in accordance with the standards issued by the ICA. It is not necessary for a joint auditor to review the work performed by Sagar, or I am not necessary have to review the work performed by the Sagar or Dhanlakshmi. And similarly, what does they say? The other joint auditors have brought to the said joint auditors notice any departure from applicable FRF or significant observation that are relevant to their responsibilities. So they are saying that you can assume that if at all I was aware about any of the departure from the financial statement or any of the departure or any significant observation that according to me is the responsibility of all the joint auditors, then I would have brought to your attention. If I You can assume that I would have brought to your attention any significant departure from applicable FRF or any significant observation that is relevant to the responsibility noticed in the course of the audit. If I would have come to this, I would have made you also aware. And similarly, I can assume that you will also aware about this fact, make me aware about this fact if at all you come across any of the significant departure or significant observation in the FRF or in the course of audit. And then lastly, it says where a financial statement of a division branch are audited by one of the joint auditors, the other joint auditors are entitled to proceed on the basis that financial statement comply with all the legal and regulatory requirement. That means you can assume in the case of branch audit done by another joint auditor, that means we have divided branch wise. We divided branch wise, the joint audit was divided branch wise. Then you can assume that yes, that branch was audited perfectly done by you with all the relevant legal and regulatory requirements, standards on auditing provisions and everything. Similarly, before finalizing their audit report, joint auditors shall discuss and communicate with each other with respect to what conclusions you are arriving at, and I will tell you what conclusions I am arriving at. We should discuss among ourselves and then finally draft our audit report. So this is again repeating, same as above, and conclusion, this is also repetitive. So please again reminding you to go through all the questions again go through all the questions, please. ठीक है? We will discuss the questions only if you are going through it. I don't want to proactively discuss because that will hinder your ability to tackle the questions. I want you to independently tackle the questions, try to assess what the answer should be. Are you able to get to the perfect right answer or not? Try to first revise the standard, then go through the questions and then see whether you are able to pick the correct topic as an answer or not in the entire standards. So we'll continue with essay 300 series from 11 15. ठीक है?